Be Wealthy and Smart, episode 603.
I'm gonna live the rich life, full and best life. So if y'all know what I mean, put your hands up and declare with me. Yeah, I'm full of it. I'm gonna live the good life, beautiful and glorious life.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about overcoming fear, emotions, and lack of knowledge to invest, because that is one of the hardest things to overcome with investing. And a lot of times when I'm talking with people, it is what they're dealing with as well. So I wanted to give you 5 things to focus on to overcome some of these fears, some of the discomfort of getting started investing, and really helping you move forward with that, because I know that that is a huge challenge. In fact, I can remember back when I started investing in individual stocks, I literally thought I was going to lose all of my money. I was so scared. I had been investing for years, and of course I was in the investing industry. I represented money managers and was very familiar with their processes and how they handled money, what they did, what their strategies were. But it was different when I started to take that into my own hands, because prior to that, I had just invested in mutual funds. You may be familiar with mutual funds because they're in your 401k, or you might invest in them yourself. They were before ETFs. They are not as popular today as ETFs are because they haven't been performing as well as passive investing ETFs. But that's what we had back then. We had money managers who were actually making the decisions to buy and sell stocks, trying to outperform the indexes. Over the years, unfortunately, since they weren't always successful with that, people just started buying the indexes, which is how ETFs came to popularity. I remember 2 specific points that really moved me forward with investing where I was completely fearful. The first time that I ever invested in a mutual fund, and I've told that story before, how I invested and bought when everything was going well and I thought it was just going to continue to go well. And of course, it was right at a short-term top in the market, and my investment dropped by 30% right after I bought it. That was my first mutual fund experience. Not real fun. But it taught me something. It taught me to do my homework. It taught me to get better understanding about investing. And later, when I decided to choose my own individual stocks and had enough in my portfolio to be able to diversify properly, which is really important, I was really scared then that I was going to lose everything, that I was really going to muck it up and lose everything. So I can remember very, very fearful points right as I was getting started. So I can understand people who tell me that they feel really fearful. I understand how real that fear feels, but also how it may play out very differently in your life, very much more positively. But some of the things people have told me that is their biggest struggle is dealing with emotions and lack of knowledge, or understanding the stock market and really developing a strategy, not knowing how much to put in, being too scared to go all in. So it's often that I hear people have those emotions of fear. I don't blame you. I had the same emotions, but you can move past that just by desiring a better life for yourself, by having the ability to just reach out and say, I want something more. I want my money to work hard for me rather than me having to be the one that's always doing the work. And once you flip your mindset that your money can work harder for you, you're on the right track. The second thing is you want to learn. You don't want to guess about investing. You don't want to get in and play around with your money. That is a really bad idea, and that's a way to lose a lot of money. You want to either get a mentor and learn from your mentor what to do, where to invest, how to do it, or put in the time and really do the study, read the books, order the subscriptions, put in the time to do the research. Those are basically your options. You need to either learn from someone else or be prepared to put in the time to do it all yourself, and also have the trial and error of learning about that. But you definitely need to learn before you go investing. You don't want to do experimentation. You don't want to guess. You want to know what you're doing. Number 3, you want to gain some understanding about markets and how the stock market works. Because if you're fearful every time the stock market goes down, that's going to make it difficult for you to stay in long term. And the whole secret to success as an investor is to invest long term. That's it. It's to stay in for the long haul. The people who panic and sell at the bottom are the ones who lose a lot of money and who aren't participating in that sharp rebound and going on to new heights. So if you're going to be the kind of person that doesn't have the right emotional mindset to invest and doesn't expect a 20% decline every 10 years and a 10% decline every 6 years minimum, then you're going to have a difficult time being a long-term investor. And like I said, the whole secret to success is being a long-term investor and staying in for the long term. So being a long-term investor is number 4. When I say long-term, how long is long-term? Well, I like to think of long-term being 10 years or more, but it's worth investing for a shorter period of time as well. But I think if you can have a 10-year time horizon, you're in better shape than if you're trying to do something very quickly. Day trading is not something that I recommend or participate in. It's something that's very difficult to do. And it's something that very few people have success at. However, many people have success with longer term investing. And again, the longer you have to invest, the easier investing and being a successful investor is. So here's what I have to say about volatility from my book, You're Already a Wealth Heiress, page 47. This section is called Embrace Volatility. You cannot control the stock market, so try not to beat yourself up when the big declines do happen. About every 10 years, it's normal for the market to drop 20%, so expect it. Rather than fear volatility, embrace it. The market will usually bounce back over time, so the best thing to do is often nothing. If you have not freed up cash to go bargain hunting after a 20% drop, it's too late to sell. The best thing to do is nothing. Just know big drops in the stock market from time to time will happen. Anticipate them and don't fight them. Be prepared by taking a little money off the table when sentiment peaks so you have some cash to buy bargains. This line of thinking will serve you well. What is sentiment? Sentiment is when everybody feels positive. Everybody is certain that the bull market is going to continue. The market's going to just keep going up. They actually do surveys about market sentiment, and usually if it's reaching a level of 70%, you're getting at the extreme level of bullishness or over positivity that the market is going to continue to go up. And that is usually about the point in time where you do have a pullback. And so watching market sentiment, watching those statistics can be helpful because it can kind of prepare you for what's coming. But so can reading charts and understanding how to read charts. And that's something that I do in the VIP experience, is teach people how to do that so that you can look at a chart and know, are we getting to really extreme overvalued territory, or conversely, extreme undervalued territory, and are we ready for a major move in the opposite direction? So it really can help manage the emotions to understand some of the emotional undercurrents that happen out there with investors and what's going on with the market. The fifth thing is simply to stay put and to keep compounding. As you know, the reason that you're investing in the stock market in the first place is to reach those higher levels of compounding, because that 2% or 1% savings account is just not going to cut it to get you to your retirement goals. You need to get to the 8%, 10% or better level where you can compound at that rate year after year after year and get to a really great retirement account. That's not something that anyone can promise. It's not a guarantee, but it is the best shot that we have as investors to make that kind of return year after year. And so we are going to have times where we have major catastrophes like in 2007 and 8, in 2001 through 2002. Those were major bear markets that we as investors had to go through. But there are opportunities in bear markets as well. And if you understand that, you actually can use it to your advantage. There was an investor who once said, a ton of money is made in bear markets, people just don't realize it at the time. Meaning, you have opportunity to buy low in bear markets and to buy undervalued assets for maybe even pennies on the dollar. That is a time of opportunity. That's when you usually see Warren Buffett swoop in and make his big investments, like he did in Goldman Sachs in 2008, I believe it was. And he came in, and when everyone was full of fear, he came in and bought, and it was not at the exact low of the market, but a few months before the low of the market. So he was in there buying, and he is holding a record position in cash right now, doesn't want to invest. He's waiting for that next buying opportunity. Is that advisable for us to be doing that? I don't think so. But it is something that is interesting to note, that he is waiting for an opportunity for the market to go down so he can pick up some bargains again. So in summary, we're always going to be dealing with emotion when we're investing. It's a part of investing. But if you can learn to feel the fear and move beyond it, that is going to really serve you well as an investor. Panicking and selling is not going to do anything, because if you have a long-term time horizon and you're panicking because of something that's happening that might not affect your future for 10 more years, why are you panicking now? So you have to keep that perspective and say, well, I'm in for 10 years or 20 years of investing. This is a temporary pullback. Either take advantage of the opportunities that presents, or just stay put and continue to be aware of the markets, of what's going on, but to not panic. Really getting that understanding as an investor of what's going on in the marketplace, what's behind markets going up, what makes the market go up. Getting that understanding is something super important. And that's the whole reason why I started the VIP experience, because I didn't feel like we had enough education out there to really help people understand how to invest. Most people were just thrown a 401k and said, here, do this, without any real instruction, without any real education, without really even understanding why they wanted to do it. And that's why, unfortunately, a lot of people don't participate in a 401k plan, even when it's offered to them, even sometimes when they have free money offered through the matching. So it was really about a place where people could get educated, understand investing, have a mentor, have someone explain what's going on, teach what's going on. So you don't have to either experiment on your own and be completely in the dark, or give up and throw it into someone else's lap because you don't feel you can handle it. Now you have another option, and that is to learn and to really understand what's going on and take control and gain the empowerment of knowledge, of really understanding what's happening and why, and making the right decisions for yourself, because I know you can do it. If you haven't subscribed to Be Wealthy and Smart, hit that subscribe button and you'll be updated as soon as new podcasts are available 3 times a week. And if you're interested in talking with me about the VIP experience, fill out the short survey in the show notes, and we'll set up a time that's mutually convenient and see if it's a good fit for both of us. Don't forget, we still have our Summer Sizzle contest going on, where 5 people will win wealth mentoring sessions with me, 10 people will win my Wealth Heiress book, and another 10 people will win the Wealthy Mindset Blueprint audio set valued at $197. All you need to do is fill out a podcast review on iTunes, or if you have an Android, on Stitcher.com. That will get your name in the drawing 1 time. And if you fill out a book review on the Wealth Heiress book on Amazon, that will get your name in the drawing 2 times. Winners will be announced on the podcast August 30th. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.